What's going on, guys? This is your host, Alex, Credit Expert. Hope you guys are having a good day. Today we're going to be going over what no doc, low doc, and full doc is. Full doc, otherwise known as high doc. Knowing these terms is extremely important for your funding sequence because it's going to tell you whether you need to show proof of income or not show proof of income. Now, regardless of what you do, remember, you always want to state information that is accurate, but depending on your situation, you might be somebody that wants to go for the no doc funding route or the full doc funding route. It just depends. But I'm here to break this down so you can use it for the information that suits you. Now, before we start the video, make sure to hit that subscribe button. That way you can stay updated when I upload anything new to keep you educated about credit and funding. And if you're not following me already on Instagram, go ahead and follow me. It's Alex Credit Expert, where I'll be showing you the daily life and motivating you guys to keep leveling up. Without further ado, let's go ahead and get started on this video and let's give you all these gems. So behind me, I have created the no doc versus low doc versus high doc. This is going to be the graph. I'm going to give you guys some information about each, and then at the bottom, I'm going to show you some examples of credit products that fit each category. So to get started, first we'll be going over no doc and what it is. So when you hear the term no doc in the funding industry, all this means is that most likely the bank is not going to require any type of verification for what you are claiming on the credit report. Most of the time, they're going to give you the approval based off your credit alone. And this is why it's so important that you have strong personal credit. Because a lot of people, you'll hear this all the time, say put some crazy number, put some high income. And while high income may help your situation, it's not what's going to get you an approval. Nobody cares if you're making $1 million a month, but your credit is garbage. If your credit is garbage, you're going to get declined. But if two people are going for the same credit product and somebody has super strong credit and decent income and the other person has crazy income but garbage credit, the person with the decent income and great credit will get approved almost every single time. That's why it's always credit based, as you guys see here. Make sure to have strong personal credit so you can take advantage of no doc funding, because this is my favorite. It's the fastest, it's the quickest, it's the easiest. Moving over, we got the low doc funding. Low doc funding is like a 50-50. Mostly they will give you a decision based off your credit report. However, sometimes they may want to just test what you are putting on that application. So depending on the numbers you're putting for income, they may say, hey, send us a pay stub. Hey, send us a bank statement. They may want to just verify everything you're claiming to make sure everything is good. So low doc is going to be that 50-50. They may give you an approval just based off your credit alone, but sometimes they may want to just verify that income just to make sure. So this is where it's going to be important that whatever you are putting on your application, you can back up. And then finally, we have high doc, also referred to as full doc. This is going to be the hardest type of funding to get approved for, because not only are they verifying that your credit is strong, they're also verifying the income that you are putting. So no matter what, you're always going to get hit with income verification. Now again, I highly encourage you guys to always put what is accurate. And some banks allow you to do different things. Some banks allow you to put household income. How much income does your entire household produce? That's everybody that you live with. Some other banks allow you to go off projected income. How much income are you projecting to make? So it just depends on the bank you're going to, and make sure to always read that information. Now coming back to no doc. Usually no doc funding, as soon as you submit that application, you can see some type of decision made right there on the spot. If not, sometimes it could take maybe up to 2-3 weeks. And the second thing is that it's the easiest to get approved for, because all they're really verifying is your credit. As long as your credit is positioned strong enough, you're most likely going to get approved and they're not going to ask for anything else. So again, this highlights how important it is to have strong credit. Moving on to low doc. Low doc is going to be a 50-50, so it's kind of like that medium difficulty to get approved for. If you have strong credit, a lot of times the banks are going to approve you without verifying anything else. And the great thing too is that if you have a relationship, meaning you bank with this bank, maybe you've already taken out credit from this bank in the past, a lot of times that's going to overrule and it's going to lead you to that quick decision rather than them asking for docs. And when we say they ask for docs, it doesn't just mean income verification. It can also mean verify where you live, that you're still living there. Verify that where you put for employment, you're still working there. So this is just them asking us for docs. And the reason we prefer the no doc route is because it's just so much quicker. If I can get an instant approval same day without anything but my credit, great, I already have the money. When it becomes a doc situation, sometimes it can delay the process by days or even weeks. Sometimes they may want to see where we live, sending proof of address. If we have that, we can send it in right there. If we don't have that, that could take us some time to get the docs that they need. If we need income verification, now we got to go and get that pay stub, those bank statements, our taxes, whatever they're requesting. So this is how low doc and high doc can start taking some time from us. But again, low doc is usually going to be that medium difficulty. As long as you have strong credit, it's going to be that 50-50 if you get instant approved or not. And if you have some type of relationship, most likely that'll overturn it into your favor. Well, it will just be a quick decision. However, on the high doc, this is going to be the hardest thing to get approved for. And the reason why, again, is because usually they're going to ask for all docs. That means they're usually going to ask you for income verification. They're going to ask you for that proof of address. They're going to ask you for a lot of things to just prove everything that you're putting on that application. And the biggest thing is that this just takes time. Sometimes they might do it one step at a time. Maybe week 1, send us your pay stubs. Great, everything's been verified. Cool. Week 2, send us your proof of address. And as you guys can see, this can kind of delay the process, but it's part of the game. Now, coming back over here, like we mentioned, when it's a no doc situation, a lot of the times proof of income is not going to be required. That means that a lot of times they will go based off your projected income, what you're currently making, or your household income. So up to you what you put, but just make sure to read what the bank allows. The next thing with low doc, proof of income may or may not be required. Again, this is where they may just go based off your credit. Maybe you have a strong relationship and they go based off your credit and relationship. Or if you're unlucky, maybe they hit you for docs. If they hit you for docs, again, it might require a proof of income, like sending in a pay stub, maybe bank statements, maybe even tax returns, who knows? But if they do ask you for docs, it could include one of those. And when you come to high doc or full doc funding, usually it's always going to be proof of income is required. This is because they're verifying everything word for word that you are putting on that application. So it's important to always be ready to show everything because it will be required. Now, coming back over on what are some examples of each type of funding and what type of products usually do what. To give you guys an idea, generally most credit cards will fit the no doc category. Now, this does not mean that every credit card out there is going to be no doc. I've seen plenty of credit cards that still ask you to submit proof of income, still ask you for your tax returns, ask you to connect your bank account to verify income. So there are definitely credit cards out there that will require proof of income. But for the most part, if you find yourself in a no doc situation, it's usually going to be with credit cards. A lot of banks are willing to give you a credit card as long as your personal credit is strong. Again, why I emphasize build your credit. Now, when we come to a low doc situation, most of the time when we go for low docs, things that may or may not ask us for proof of income, we're going to be talking cash loans, auto loans, and lines of credit. The reason why most banks are willing to give us a credit card with no doc is because you have to think of it this way. With a credit card, we have to swipe each transaction. So let's say we're doing some suspicious activity or maybe we're spending a lot and not paying a lot off on a month-to-month basis. They have the power to close that account or slash our limits after we make a payment in order to save themselves. So they still have a lot of control of this money. However, with a cash loan or auto loan, once you're approved and the money is either wired to your bank account or it's used to pay the dealership, the bank no longer has control of that money. So they are out. Whether you pay them or not, they can't do anything about it. Obviously, pay your stuff back and be responsible, but they have a lot less control compared to a credit card. If you start doing some fishy activity or maybe you start messing up with a different bank, they can cancel your credit card or slash the limit in order to reduce how much exposure they're giving you, which means they reduce their liability and their risk. With the cash loans and auto loans, once they've been funded, the bank is out of that money. And the only way they're going to get that money back is if you pay them. That's why a lot of times cash loans and auto loans are probably going to require some type of docs. They're going to go mainly credit-based, but a lot of times they're still going to require docs. And same thing with lines of credit, because with a line of credit, you have an available credit limit. You can use that credit limit to then deposit it into your bank account as cash. And remember, once you take that money out, it's gone. So even though it's a little bit more similar to a credit card, lines of credit give you cash access, which is why it makes it a little bit of a more riskier product for the bank to lend to you. So going back to this, no doc, usually banks have less risk because they can just shut it off or slash the limit when they want to. Low doc, they're gonna have more risk because once they give you that money, they're out of it. So usually they will ask for some type of income verification. But if you have a relationship, which I didn't put here, meaning you took out a credit product with them before or you have a lot of money sitting with them, a lot of the times they'll be willing to override the income verification needed and then just make it a credit-based decision where they don't ask for income. But most of the time, it will be some docs involved. And now lastly, we got high doc. Again, this is going to be the harder type of funding to get approved for. And the reason why is because usually with this type of funding, we're talking very, very big amounts. We're talking the riskiest type of funding and the biggest amount of funding. Mortgages. Usually for a mortgage, they're going to make sure everything is on point. They need to make sure that you can pay back your debt if they give you this new loan. So they're going to be checking your DTI. They're going to be checking your employment. They want to make sure you're stable where you're going, not always moving, and that you've been somewhere for a long period of time. They're also going to check your credit, make sure you've handled everything responsibly. So there's a lot that goes into mortgages, and it's always going to be full doc. SBA loans. If you're a business owner that's trying to get a loan to keep growing, you better have your tax returns, you better have your paperwork in order, you better be profitable, you better have good credit. There's a lot of things that go into SBA loans, and they need to make sure whoever they're giving this money to is proven and can actually pay them back. So this is why this is also going to be one of the full doc loans that it's going to be harder to get approved for. And then, like I mentioned, most cash loans and auto loans, they are also going to be full doc. The reason why is because once they give you that cash, they are hoping and praying that you pay them back. So a lot of times they got to make sure that your credit is good, but also your income is good, and also that you've been working where you say you've been working for a good amount of time. Because if you've only been there a week or two, we don't know if you're going to be there for the long run. So this is where they can start asking again for income verification, employment length, verifying that as well. Sometimes I've even seen them ask for recommendation letters. A lot of stuff goes into this type of funding. And same thing with the auto loan. Once they pay for that car and they give it to you, they're hoping and praying you pay them back. So remember guys, HiDoc, make sure everything you put is good to go, ready to go, and verifiable. Low doc, there's a 50-50. They may just go credit based if you have good credit and good relationship, or they might hit you for document verification. And then no doc, usually they're just going to go credit based as long as you've proven yourself. No income verification generally needed. No doc is going to be usually the quickest funding you can get. Low doc can be quick, but can be also delayed if they ask for documents to verify. And then high doc will usually be the longest to get funded because you got to go through all the documentation verification that they need. So remember, regardless of which route you go, everything suits its purpose. If you are somebody that has really strong credit, but maybe you yourself are not making much income, if you live in a household with a lot of people making good money, maybe the no doc route is for you. However, if you're somebody that's making good income, can prove everything, high doc is still the way to go. So depending on your situation, you may benefit from a no doc bank, from a low doc bank, and you may want to stay away from a high doc bank. Or maybe you're in a situation where you can go to all three because you have everything in order. This is why it's important to understand which banks are usually doing what. That way, when you go for your funding sequence, you can maximize everything and get the maximum amount of approvals. The other great thing is that if you understand which banks do what, you can go ahead and leverage that in order to get the maximum amount of funding without ever having to show anything. So I hope you guys got a lot of value from this video. You guys can understand the terms now. And remember, everyone's situation is different. Make sure whatever you're putting in, you are reading what they allow, and you should be good. So that's it for this video. If you guys liked the video, click the like button, leave a comment down below, click the subscribe button. And if you guys are looking for funding for yourselves to start or grow your business, make sure to shoot me a message so my team can take care of that for you. Other than that, hope you guys enjoyed this video, and I'll see you guys for the next one.